bad things happen to good people, but let's figure out a way to solve this. What's your issue? Is there a way we can fix this and move forward to help you stay in your house if you want to stay? And if you want to go, let's get you out of a bad situation.
Welcome to Real Money, Real Life, the podcast where we get real about money and the messy human stuff that comes with it. I'm Linda Grizely, financial educator and your Me Money guide to financial clarity. Each week, we dive into financial concepts and money strategies, but we always tie it back to real life, emotions, mindset, and how money actually shows up day to day. If you're ready for practical tools, mindset shifts, and honest conversations that meet you where you are, not where the world thinks you should be, you're in the right place. Because you deserve to feel confident with your money and good about how you use it. No judgment, no lectures, and definitely no putting yourself last. Hello, everyone. If you are listening, you are one of the real ones, the ones who don't turn away when things get hard, because understanding what's really happening is the first step towards getting back in control. Today, we're talking about foreclosure. Not from the bank's point of view, but from yours. What actually happens when payments are missed, what rights you might still have, and what options might exist before things reach the breaking point. My guest today also works on the other side of the process, buying and managing distressed notes. So he brings a behind the scenes view that can help you see how the system really works and how to navigate it with less fear and more clarity. Scott Carson is the founder and CEO of We Close Notes, a Texas-based real estate investment company specializing in buying and selling distressed mortgage notes on residential and commercial properties nationwide. After leaving the mortgage industry in 2008, he built a career helping investors understand and profit from non-performing notes, while teaching everyday people how to navigate real estate challenges like foreclosure. He hosts the Note Closers Show podcast, and it has been featured in the Wall Street Journal, Inc. magazine, and Entrepreneur. Known for his straightforward teaching style and sense of humor, Scott's goal is to help people see opportunity and clarity where others see only chaos. Welcome, Scott.
Honored to be here, Linda. I'm going to have to pay you. I need to buy your time to go out there and have you announce that when I get on stage at some point.
Well, I'd be happy to do that. I would love to do that for you. So I want to start with you were in the mortgage industry. Obviously, 2008 was probably a tipping point, but tell us how you got drawn into note investing.
Yeah, it's number one question. How did you get into this niche aspect of real estate investing? We started, me and a buddy of mine started a mortgage company back in 2004 with another real estate investor who was traveling the country teaching creative financing, owner financing, real estate investing all across the country. So I was literally traveling like every other weekend to a big conference in front of anywhere from 500 to like 1,500 real estate investors. And I was doing the mortgage side, the origination side. Hey, we're helping real estate investors get mortgages on their or cash out refinances or how to purchase traditional property. But for 4 years, from 2004 to 2008, it's like an apprenticeship. I could learn from Bob, who was the investor, who taught all this creative financing stuff about buying notes and selling notes and how to create buying on terms and stuff like that too. So that's how I got into the note space. And he taught buying non-performing notes. So I bought my first non-performing note in 2007. And that way, when everything hit the fan in 2008, I was like, well, I'm going to go from the origination side because that business basically died overnight. And then just started picking up the phone and calling, calling the banks that we originate from to get them to send me their list of non-performing notes. A little back before that, I empathize with distressed borrowers out there because I was once one of those. I was facing losing my actual house back in 2001. My wife and I at the time, out of college, making good money, bought our first house in Round Rock, Texas, and was doing well with that. She was a private school teacher, not making much, but I was working as a financial advisor for a division of Citibank, and I got laid off. And we also had two other investment properties we bought 100% financing. Well, those two tenants also got laid off and stopped paying us. So I was trying to make 6 mortgage payments on a private school teacher salary, which didn't do very well. So I was scrambling. A lot of folks doing whatever I could, waiting tables, bartending, selling stuff online, doing whatever I could to make ends meet. And we were able to get rid of the 2 investment properties and then able to keep our primary residence, avoid foreclosure literally at the last minute. But so that's why I always have empathized with borrowers who are facing trouble. Is like, look, bad things happen to good people, but let's figure out a way to solve this. What's your issue? Is there a way we can fix this and move forward to help you stay in your house if you want to stay? And if you want to go, let's get you out of a bad situation.
Yeah, wow, that's a powerful story because you can see how easily that could happen to someone. Everything's going good and you're like, wow, we're doing this. We got these rental properties, we're setting ourselves up, and you're thinking you're doing all these great things. And then all of a sudden, the bottom falls out basically. And you're like, this did not work out the way we wanted it to. But it sounds like you were able to get through it without too much damage, right? And so it's great to know that you understand that side of it, because sometimes we think that when we're on one side of something, that everybody on the other side is against us or just, doesn't understand where we are. So it's good to know that. So I think that I want to start with, what is the thing that happens when people get behind on their payments? Let's just start from square one. Like, you're behind on your payments. What do people need to know?
Well, usually when we look at what's going on in the market right now, when they're facing getting behind on their mortgage, it's probably not the first thing they're behind on. They're behind on their credit card payments. They're behind on their car notes. They're maybe behind on their student loan debt. We see that happen a lot of. They're just behind, and usually the mortgage is like the last thing they want to go late on in a lot of cases. And there was an interesting article out recently. I don't know if it was the New York Times or Austin American Statesman talking about people were like, well, do I pay my car payment because I got to get to work, or can I let the house payment go? And it all depends, especially with your mortgage debt, what state you're in. Some states have a very fast foreclosure process, like Texas. You get more than 3 months behind, they're going to start the foreclosure process, the lender with. Whereas in like New York, you could drag it out 3 or 4 years of not paying your mortgage before you ever really start seeing the foreclosure process. We had one guy that we knew hadn't made his mortgage payment in 8 years, and he lived in New York City, which I found it kind of interesting. He was renting out the property, making cash flow, but not paying the underlying debt. But once you're behind, really, once you start getting behind by more than 7 days, you're going to notice that your phone is going to start ringing a lot from the bank, the lender. You're going to start getting certified letters in the mail, especially when you start falling behind more than 30 days. They're going to want to reach out to you and say, hey, what's going on? The best thing you do is not answer those. Is the best thing you can do, especially if you've been laid off or something, death of a loved one, something like that, is the communication is key, regardless. Banks have different things in place, forbearance agreements, things that they allow you a lot of times. And we saw a lot of this happening during COVID, where they were like, okay, you're laid off of work, we'll give you a 6-month forbearance agreement where you don't have to pay anything for 6 months, but then we need you to get caught back up at the end of 6 months. You're going to start learning who your post office person is, because they're going to be required to deliver certified letters. And the thing is, just open it, take it, communicate it. As a lender, if we send out correspondence or trying to reach the borrower, if we don't get response, we start immediately assuming the worst case example, like, oh, they're not responding, we're going to have to foreclose, when we really don't want to. Most lenders have programs written in the spot, like, hey, let's give you 60 days, 90 days, 120 days, if not longer, to get back on track, depending on what's going on.
If someone is gonna, if they know they're gonna miss their first payment, this is the first one, I'm not gonna make this one. They're already behind on everything else, and now they're like, okay, the mortgage has got to go too. Should they be proactive and reach out, or should they just not pay it and wait?
No, they should be proactive and reach out. You know, proactive is very important. Just saying, hey, I just lost my job or something happened. I'm having a hard time in paying everything else. And that is a big thing. Now, there are some different things. Some banks will say, okay, well, could you make half your payment this week and split it up into 2 payments versus once a month? Sometimes that might work. We've done that multiple times for borrowers who are a little tight. Give the opportunity to pay half a payment and then 2 weeks later pay the other thing. So the communication aspect is key. When you don't communicate, you'll lose a lot of those options to drag things out or delay payments.
Okay. And so you think that the mortgage companies that they're working with would be willing to do those things too? Because you're saying that you are, but I want to get back into what you do too, so people can understand where you're coming from when you're talking about that. But just a regular mortgage company, whatever the main ones are, they're willing to work with you also.
They are. They totally are. They have it set up because the more communication they get, the better. And let's understand this for a second. A bank does not want to own your house. Let's just put that right out there. Banks do not want to foreclose. When they have to foreclose, they treat that as a non-performing asset. It doesn't help them. Now, The way the lending system works is that basically when a mortgage goes in default, where it means they're at least 90 days behind, the bank now has to pull money out and hold it in reserves that they can't lend out. So a non-performing note costs that bank 10 to 15 times in fees that they could be collecting by leveraging or relending it out. So bank doesn't want to foreclose. They're willing to work with you in a variety of fashions. And it all depends on what's going on. I mean, if you want to stay in the house, you eventually at some point are going to have to pay and work out some sort of payment plan or modification agreement. If you're looking to get out of the property because you know you can't afford to, banks will often allow you to do different things of turn around and listing the property. If you owe more than the property, maybe doing a short sale. If you know exactly what the property, they may be willing to pay you to do like a cash for keys or what we call a deed in lieu of foreclosure, where you just sign the house back over the bank and walk away without having a foreclosure on your credit. The worst thing you can have happen is a foreclosure. Foreclosure is going to ruin your credit for 7 years. Late pays will fall off in 24 months. Okay, so keep that in mind. You know, you can always file bankruptcy if you want to delay things, but a lot of times people will file bankruptcy for a variety of other things besides just being late in their mortgage. Maybe they do have had a medical issue, or they have credit cards or things. So your best bet before you decide, hey, I'm going to go file bankruptcy, is talk to the bank, find out what options are. If they're not willing to work with you, then bankruptcy might need to be filed to avoid losing your house, and then definitely talk with an attorney. I'm not an attorney or accountant, but make sure you talk with somebody and have them go through your different options as well. But most of the time, banks are willing to work with you to keep you in the house. They don't want to take the property back. They don't want to own it. There's a whole variety of actions you can take. And also, too, look at your local community. Go talk to your church. Sometimes churches will have different programs or different groups, organizations in your area that are put there in place just to help you stay in your house, to avoid foreclosures on money that you may not have to pay back. They're just there to help cover your rent or cover your mortgage payment for a month or two. We get phone calls about once every 6 months from different organizations. Hey, so-and-so is falling behind their mortgage. Is there anything you do with them? We're trying to get them to qualify for a local grant to cover 6 months of payments. And so, yeah, I would much rather work with a bar, and banks would actually rather keep you in the house anyway versus taking it back. Because now if they do have to foreclose, there's legal fees for that. Then it's going to cost them usually 3 to 4 times what it would a normal investor in winterizing the house, protecting it, rehab it, and all that other good stuff that goes along with that. So communication is key, and fully explore your options. If you get somebody on the phone, and this is where I hear the most amount of frustration from people, is they're calling their lender to communicate. And it's just a automated voice tree. They get a hold of somebody in India or Pakistan that they can't understand. If that's the case, I get it. Hang up and call again. Ask to speak to a manager. Ask to speak to a supervisor and tell them what's going on with you. Sometimes it's just talking to the right person who isn't just is having a normal day versus a bad day. It's making more than $15 an hour, is just going through numbers there. Talking to a manager, tell them exactly what's going on, and have empathy. And the most important thing, too, besides the communication, is that the lender or the manager gives you something to do, like fill out your financial statements or things like that, and they send it to you. Get that stuff turned back into them in a timely fashion. Don't wait 2 weeks, 3 weeks to drag all that stuff out. Fill it out, get it back in, because the sooner you get it back in, the more opportunities and more solutions that they have.
No, that's great advice. I know when you're calling, sometimes when I'm calling anything, when I'm customer service of anything, I'll call and I'll get a person on. And like if they're not understanding what I need, I'll just say, okay, thanks. And I'll hang up. I'll just call and hope to get a different person who is going to understand my need better or answer me better, right? Because you just never know how, this could be day one on the job, the person that you're talking to. So if you feel like they're not understanding or not giving you the answers that you feel like you need, not necessarily what you want to hear, because that might not be the thing, but if they're not giving you what you need, just hang up and try it for someone else. Great advice. Yeah. Now,
Another thing, too, is if somebody tells you something to do, get their name, get their badge number or whatever employee number, and write it down somewhere to save it. Because,
employee number. Yeah.
because somebody will tell you, oh, yeah, we'll send you out a financial statement. Okay, well, how's that coming? Is it coming email? Is it coming direct mail? Or what I would qualify for. It's important to have those things in hand so that if you talk to somebody else, they can refer to the notes in the system. And most of these customer services people are supposed to be taking good notes, talking about what the previous conversation was about, and how it goes back and forth. The reason I say this is, as a note buyer, I see the actual servicing notes when people call in who are distressed. And the worst thing you want to do is cuss out the person on the phone, all right? Because they'll make a note in there, person was angry, told me to F off, told me that I was a son of a motherless goat. You know what I mean? Something like that. Don't do that. Because if your note gets sold, people are going to see that. They want to see, oh, the person was nice, person was followed back up. They answer, it was inbound versus outbound. That's always a good thing. You can call the bank ahead of time versus them trying to track you down. So that's the thing. Take good notes yourself and who you talk to, and then get that person's direct line, direct extension if you can. Because then if you walk talking to one person over and over again, it's better versus having to retell your story over and over again and then trying to read through the tea leaves.
That's good to know. I never thought of asking. I always ask the name, but I never thought of asking like for an employee identifier number. Because sometimes you'll ask and they'll be like, my name is John. And you're like, yeah, your name's not really John. That's what.
You mean,
It's like,
hello, my name is Steve? No, your name's not Steve.
like your name is not John. But and so I write it down. I'll write, the date and the time and spoke to John and blah blah blah. But I'm like, if I call back, like, yeah, I spoke to John, they're probably like, who's John? Like, John means nothing to them. And like, what proof do I have that I actually talked to somebody other than me just saying that I did if my notes aren't in the system? Um, and yeah, it's good to know that they are recording whether what your demeanor is when you're speaking to them, because I never really thought about that. I mean, I'm not a person that usually does that, but it's good to think about, that's going to be in the notes. So try to keep your cool as much as you can.
Yeah, you got to
So
realize that person in their line is not the person that's going to foreclose on you. They're just trying to do their job. They've got specific parameters, things they can do, can't do. Don't lie to them. I'll tell you a funny story. We were calling on a borrower one time who hadn't paid in like 6 months. And we will go to their social media. We went and looked at their Facebook, and they were like, oh, should I pay my mortgage or go to Disney World? I'm going to go to Disney World with the kids this month and not pay my mortgage. I don't have a lot of leniency for a borrower like that. You know what I mean? Like, come on, let's be honest here. Another time, this lady said she couldn't pay, and I found out she just bought a brand new Cadillac Escalade, and the whole had gone on the shopping spree. And I was like, you might want to go return those clothes, and let's talk about, paying your mortgage. Like, how'd you know? I was like, well, you blasted all over Facebook and social media. So careful what you put out there.
my yeah, it's funny that people don't think about the fact that we live in an age where people can look up almost anything about you. All right. So, are there different stages of foreclosure and different rights that homeowners have during those stages?
There are different stages. Each state has a little bit different foreclosure time frame. Okay, so let's talk. There's, and the first thing to know is if you're in a judicial or non-judicial state. So a non-judicial state means once you're usually 90 days or 120 days behind, the lender, all they have to do is go file it publicly that you're behind, and that's called like a notice of default. They go file it usually at the county assessor's um, office. It may be publicized in a paper. It may just be get posted on a bulletin board like they do here in Texas. And then it can go to foreclosure in the next month. And they will send you notices. They'll send you letters. Hey, it's going to go to foreclosure. Or if you see a notice of default filed and sent out to you, you really need to pick up the phone and call the attorney that's handling this to try to delay it or talk with them. But that's usually the first point is once you get beyond 30 days, you're kind of behind. But that 90-day to 120-day period varies by state. You hit that point, that is when they're really going to accelerate it. That's when you'll start seeing, especially in a non-judicial state, where a bank will then hire a trustee, and you'll see a notice file called the notice of substitute trustee, where they're putting an attorney in place to handle the foreclosure process. So the bank doesn't want to do that. They'll have an attorney handle that. In a judicial state, and what that means is the judicial has to go through the court systems, go through, see a judge. That's normally going to be 6 months to 18 months to 3 years if you're in New York, 2 years if you're in New Jersey. But for the most part, about 12 months. States like Ohio, Indiana, those are 6 to 9 month process. The non-judicial states, the fastest states are like Texas, Georgia. Basically anything west of the Mississippi is a non-judicial. East is kind of a mixed bag. Now, same thing Once you hit that 90 days, you're in default, and then what will be filed in a judicial state is called a lis pendens. All right. And that's just like a notice of default. They're basically filing it that you're officially behind. They're going to start the foreclosure process and go that route. And in Texas, where your foreclosure, as long as the bank, once you hit that 90-day period and they file a notice 21 days before the first Tuesday of the month, they can foreclose in 3 weeks. Very, very quickly like that. Georgia's 30 days. So the thing is not to wait around. When I was just a normal real estate investor, we would send out letters and postcards to people facing foreclosure. And, the first Tuesday of the month here in Texas is the foreclosure auction. Well, our phone will ring the most on the Wednesday or Thursday after the Tuesday. And once it's gone to foreclosure, there may be nothing you can do. You may just be getting a knock from a realtor the next day, and in the sheriff's office, you're going to have to vacate. Things to do to avoid a foreclosure is something you could go and hire an attorney to file what's called a TRO, or temporary restraining order, before the foreclosure to delay things. That can usually buy you 30 to 60 days. If you file bankruptcy, you go and hire an attorney to file the bankruptcy thing. That can delay it 90 days. You may not have to go through it, but that can also delay things. You're going to have to fill out basically it's a 9-page document. It's the filing with the bankruptcy filing, where you have to disclose all your debts, what you owe, any valuables, any savings, any other assets, and all your debts on that. And that's filed, and that's public record. So anybody can log on to the bankruptcy filing on pacer.gov with your name and look to see what all your debts and troubles are. And then you have to kind of file a payment plan if you're going to file a BK Chapter 13. Whereas, how are you going to pay back what you're behind on over the next 60 months? A BK Chapter 7, you can't file that for a liquidation. You've got to file a Chapter 13 and approach the courts and the judge, say, listen, I would like to file a Chapter 7, which is liquidation. And they have to appoint you. Most of the time, you're going to file the BK Chapter 13, which is like a payment plan to get out of debt. And you have to make your payment plan kind of make sense. If it doesn't make sense, like if you owe a bank, your mortgage payment's $5,000 a month, and you say, well, I'm only going to pay $50 a month for it, that's not going to be accepted, and you're going to get that kicked out. Let's talk to a bankruptcy attorney, know fully what your options are. It may make more sense just to do a TRO to delay things while the bank gives you a little bit more time to negotiate with the attorney or the loss mitigation or the foreclosure department of the bank to get back on track or stay out of it. One time, I have to tell you a funny story. One time we were negotiating. I used to own a loss mitigation, a short sale company. We were doing short sales here in Austin, and we kept one lady out of foreclosure for 4 years while she went to school, 2 years to become a esthetician. So by the time 4 years passed, she had gone to college, gotten a degree, was making good money at that point. She could afford the mortgage then. So it was kind of a there's ways to delay things by just working with if the bank's willing to work with you can delay things for quite a while.
So when you go to pay it back, do you have to like pay back the lump sum or just make bigger payments? Or I guess that's all negotiated at that time.
Yeah, that's all negotiated. And that's that's a very good point. What happened to a lot of people during COVID, they could go 18 to 24 months without making a payment, but then the bank said, okay, once your 2 years is up on your forbearance agreement, now you need to make a lump sum 2-year payment. Well, people didn't have that. People just don't have that. So you got to make sure if you're going to do some sort of payment arrangement, really find out what's going on. At the end of my 6 months, am I going to be able just to start making the mortgage payment what it was plus $100 or $200 a month? You're not going to need a lump sum. Some lenders will take the amount that you're behind and just put it on to the back end of the loan and extend your loan 2 years if you're in a 2-year forbearance agreement. So talk with it, get everything in writing of what they are offering you, and then make sure that you get that and everything matches before you sign on anything or make a payment. Because here's the thing. There are some ways to kind of drag things out. Now, what you will notice is if you're behind, like say you're behind by 3 months, and then you go to make a 1-month mortgage payment to the bank, they may not accept it. Some will, and if they do accept that 1 month of payment, guess what? That starts what we call the statute of limitations over again. So if a bank accepts your 1 month payment and you're 3 months behind, they can't foreclose onto you. Them accepting that payment, cashing your check or your money or whatever it might be, is saying we accept that you're 90 days behind but we're not going to foreclose on you. So some people will do that. They'll pay 30 days late, wait another 30 days, wait another 60 days, pay another 30 days late, and accept it. What you have to worry about is a bank usually is only going to accept at least a full payment. They're not going to take a partial payment and apply it to your mortgage, because that shows to the court, it's like, oh, you accepted a half a payment. You're okay with them doing that, you know? And that's why it's important to understand, like, if they allow you to make a partial payment, they're not looking to foreclose anytime soon. If they want you to make a full payment or full amount to, try to get them to accept at least 1 month of payment, because then it would require you, if you're 90 days behind and they accept one payment, then it would take you being another 3 months late before that 90 days would restart all over again. Does that make sense, Linda, what I'm talking about?
Yeah, it does make sense. So that's really great information though, because I didn't know that. I mean, I've never been in that situation, but just to know that if you make those payments or a partial payment or a full payment and they accept it, that changes the rules. That changes what's happening, or it readjusts or resets something. So that's good to know. But there's also a chance that they might just reject that payment, and then you're really you're really headed down that path.
Yeah, a lady that in Milwaukee that we were dealing with, who was always behind them. We caught her trying to commit fraud, actually. She actually signed my name on an agreement with the city because she was running a daycare, and I never saw the agreement. And the city called me to verify this was my signature on a form. I'm like, well, no. So I called the bar. I was like, hey, I just found you commit fraud or try to commit fraud. You need to make your payments in full. Otherwise, we're just going to go to foreclose, and you're going to lose your right to business, because you'll just get struck off the city's approved daycare list. But we had another lady that was 6 months behind, and we said, listen, we've given you every opportunity in the book to make a partial payment or make anything like that. We're not accepting one. So she sent in like 1 month of payment. Well, we turned around and immediately sent it back to her. Like, no, we're not playing with you anymore. You need to if you want to stay in your house, you got to bring the full 6 months to the table. We've given you opportunity after opportunity. And she got all mad about the payment being reversed. I was like, listen, we told you, we've given you options. At some point, the line was crossed, and we're not willing to work with you anymore. If she had communicated in the front end, we'd been a whole lot easier to work with. But at some point, like, listen, this is costing us money because we have an asset that's non-performing. And the same thing, the bank is going to give you only so many, kind of get out of jail cards. Another thing that's important to keep in mind too, that we see a lot of people struggling with foreclosures these days, is property taxes. You see a lot of those with like FHA loans, where people are taking out an FHA loan to get a first-time home buyer mortgage, something like that. We're only to put like 2-3% down. Making sure that if you're going to do an FHA loan, I would not go buy a brand new home, something that's being built from the ground up, because your tax accountability is going to be way off. And remember, property taxes are only updated once a year, and if you're buying a brand new home that was once just a slab or a lot, the tax bill for that lot is a whole lot less than what it would be for a $200,000-$300,000 home on it. And so we see that where people budget everything based on this low tax value, and then the taxes get reevaluated at the year end, and now they're in default because they can't afford the taxes. So pay your taxes, because that's a bank will foreclose to avoid losing the home to a tax foreclosure, and you don't want to risk it. Same thing with insurance. You're putting insurance on your property, and a lot of people in Florida are struggling to pay insurance because insurance has tripled, quadrupled in some areas, and so making sure that you can afford it is important. Same thing like what's happening in the Florida condo market. You have these huge condo association fees. They're sometimes six figures because it's an older building, and people are getting foreclosed because they can't afford to make those special assessments. So make sure you're buying something that's been around for a while, that you don't have special assessments, and make sure that the insurance is pretty normal. I'm not trying to talk anybody to not move into like the Florida coast, or as we call it, God's waiting room, but make sure that pretty sunrise on the water does have its expenses.
Yeah. Okay, so I wanted to ask about taxes and insurance. So if they're escrowed and they're part of your payment and you stop making payments, is the bank going to pay those? They're going to pay your taxes and your insurance bill, because they need the taxes paid and they need the property covered. So they're going to like cover that for you?
They're not going to cover it for you, but they will go ahead and pay it. They'll reach out, and especially on the insurance side, if we get a notice that the insurance has been paid in 30 days, we'll go out and get forced place insurance put on it on ourselves to protect the property. Now, what used to happen years ago is that a bank lender could charge the borrower 2 to 3 times the cost of forced place insurance as a penalty for not paying it. Now they can't do this. It's got to be straight up, cost for cost. But that does technically trigger a foreclosure clause. If you're not paying the insurance on it, they have the right technically to foreclose if you're not covering it. Same thing with the property taxes. They don't want to risk losing the property to a tax sale. Now, most municipalities, most counties won't foreclose until you get like 2-3 years behind on your property taxes. But a bank doesn't want to wait that long, especially if you've already been behind. Now, the great thing about if you're buying a house and it's escrowed in, well, guess what? They know you've got some money sitting on the sidelines there that's been escrowed. The big thing they don't want to see is if you've bought a house and you're under 80% LTV and you don't have to have your taxes or insurance escrowed. They're going to double check that and watch that. They usually will hire somebody or have somebody just handles double checking property taxes. So they'll get a notice from the county if you're behind your property taxes, and they may go ahead and pay those on your behalf, but then they may then require you to start escrowing your taxes and insurance again if you're unable to pay your taxes. Some people wait till the end of the year to pay their taxes versus escrowing it in. It's completely on what you want to do for the most part, and what you can afford. I like to think it's a smart play to roll it all in there at once, and you're paying it out, or you're a year ahead if you can. But if you're behind and facing things, we all know, hey, you're not paying anything extra ahead. You're just trying to stay afloat as it is.
Okay, let's get on to what you actually do. So, someone has a mortgage and they fall behind, and somehow the bank sells you the note. Is that what happens on the other end?
So yeah, I have a lot of relationships with banks and lenders from doing this for over 17 years. And banks and lenders send me a list of their naughty notes where the borrowers haven't paid in 6 months to 6 years in some cases. And the borrower still owes what they owe on these mortgages, but we can buy that debt at usually a substantial discount, 50, 60, 70 cents of what's owed. And how we make our money is then by going to the homeowner and say, listen, hey, Jill, John, what happened? You fell behind. You're behind by a year. What's the situation? Do you want to stay or do you want to go? And we'll try to work out some sort of payment plan to get the borrowers back on track. And that works about 70% of the time. The other 30%, the borrowers just can't afford the property. They're out of work. They're going to face foreclosure. And then we'll either do like cash for keys, give them some money to walk away, or just let them walk away scot-free without owing on the mortgage. And that's always a benefit to them, because if we foreclose, like I said earlier, it's going to kill their credit for 7 years. They won't be able to buy a home for 7 years. But if they just deed the property over to us, or we give them cash or keys to walk, it's just basically 24 months until those late pays fall off their credit history, and then they can go get a new mortgage in a lot of cases. So, yeah, we buy this debt in about 20 to 30 states. Don't call me up and say, Scott, I want you to buy my mortgage. It doesn't work that way, okay? We work with a lot of smaller regional banks, stuff like that, not Bank of America, Chase, Citi, Wells Fargo. They're not going to sell us a one-off note. But yeah, we buy the debt and then try to work it out with the homeowners. We actually make a better yield by working it out with the homeowners most of the time. In some cases, maybe we should talk about that, because we do have a little bit of an aging crowd. At the reverse mortgages are kind of popular. This is something, if you're over 65, is it 65 or 62? I always get it off. If you and your spouse are 65 or over, living in a house, you've got a ton of equity, but somehow you can't afford the mortgage payments anymore. Your income's gone, you've gotten sick, whatever's happened. If you've got a ton of equity, 20% or greater, what might make sense for you to do is go get a reverse mortgage. And how a reverse mortgage works is a lender will look at the equity in your house, the value, what you owe, and they may give you what's kind of I say they annuitize your property, where they may give you a chunk of money towards your equity, or they may give you monthly payments, with the idea that you're going to stay in that house, not have to make any payments until you pass away. But at the point that you pass away, your family is responsible for the full amount of the loan, which is usually going to be about the value of the property or higher at that point, depending on what's going on. And so with that case, you've got about 90 days, if you're the heir or the kids of the person that passed away, to either refinance out the bank on that loan, or sell the property to pay off the loan in full. We're starting to see more and more of these reverse mortgages come to us from elderly borrowers who have passed away, who have no heirs to take care of them. But it can be a good thing, because the great thing about, if you're facing foreclosure and you're 65, there's zero credit requirement. They don't care what your FICO score is to qualify for reverse mortgage. It's based solely on the property and the equity that you have in the property and your age, which is a nice it's a nice thing not having to make a mortgage payment on that stuff, and maybe even getting a chunk of equity sent to you.
I can see where on the back end of that, though, after the person passes and the heirs have to try to sell it, that 90 days is not a lot of time
Mm-mm.
to get, especially if there's multiple heirs involved, to get them all on the same page, decide what's going to happen to the stuff, decide who, who gets what, and clean out the house and get it on the market. And 90 days is a short fuse.
They'll extend it, but that's what they're going to want to know. What kind of action are you taking in 90 days? They understand that things may have to go through probate courts if there's no will and stuff like that. But at roughly 90 days or longer, they're going to start, hey, what do you want to do? And let's go that route. We see that stuff come to us. It's usually been a year or two after the borrower passed away before they get around to selling the debt, because it's got to go through, probate and stuff like that before the bank can turn around and foreclose and sell the note off. But like I said, it's a great, we've put a lot of elderly borrowers in that were facing bad situations. Said, listen, you got a ton of equity in this house. Let's put you in a reverse mortgage, or go get a reverse mortgage, and then you'll have some money without that biggest monthly payment, and that makes things a little bit easier. Now, of course, if you're wanting to will the property over to family and friends like that, that's going to be a little bit more difficult because you got a mortgage on it. But talk with your financial advisor. Definitely talk with a mortgage expert about that, and what might work best for you. Sometimes kids don't want the property because it may take too much work to fix it up, bring it up to date, repair anything. Others may want something. So talk with your family. Just like I said, communication is key.
Yeah. Yeah, I think you mentioned communication on all parts of this. Every time you said talk to this person, communicate, communicate, communicate. So, all right, mindset and internal obstacles. Why is there so much shame and silence around foreclosure, and why is it hard for people to communicate about it?
Well, I think let's talk the communication side, because I think a lot of it dies into the shame side of it. Is
Exactly.
in today's world, it's such a keeping up with the Joneses society. You know what I mean? And this is the thing that always drives me bonkers. Is property is so expensive these days. It's one of the biggest expenses. It's so unaffordable for most parts. When my parents bought their first house years ago, it was not the Instagram famous TikTok crib house that a lot of people have these days. You know what I mean? Ooh, modern. It was, it needed a little bit of work. It was like a 3-bedroom, 1-bath, brick home, a lot cheaper, but it wasn't the big fancy splash that we see a lot of these days. And I always joke about mortgage rates. Look, a 6.5, I think the 30-year mortgage average is 6.35, 6.4 today. When I looked at it before we jumped on here. That's a pretty damn good rate. Yes, it's about 3 times higher than it was back in 2020. But my parents' first mortgage on their house that I grew up in was like closer to 18%. You know what I mean?
Hmm.
Totally unaffordable, but they did what they had to do. So don't complain to me about, high mortgage rates. I will tell you, like, you're probably overbuying a house. It's not your forever house. It's your first house. So get into something and make sense. Now, another thing, too, people don't want to admit they make mistakes. People don't like to talk about money. I love your show because about the me money. When you have a house and a mortgage, it ain't about me money. It's about we money. What can we do to stay in the house, right? And that's the thing to keep in mind is talk with your family. I've had issues. I'll give you a great example. We bought a note a few years ago on a property in Nashville, Tennessee. The guy hadn't paid in over 24 months. And Tennessee is a relatively fast foreclosure process. So we sent out a door knocker to the actual house because his mail was being delivered to what we thought was his office. So we sent out a door knocker to the property, and the door knocker knocked on the door, and a lady answered. Well, it turned out it was his wife, and our door knocker was delivering a foreclosure notice, and she had no clue about what was going on. And I would have loved to have been a fly on the wall that night in the house, because about 2 days later, our servicing company gets a phone call from the borrower finding out exactly the payoff amount, even though he'd been sent it multiple times. And 7 days later, we get full payoff. He just had gone and cashed out his 401k to avoid losing the house to foreclosure. Now, we offered a modification. We offered a variety of things well before that. But that's the thing is, people don't want to talk about, the shame. I get it. Things are tight right now. But the more you can communicate with your spouse about things, or with your family, hey, your family doesn't want to see you struggle. Your kids don't want to get pulled out of their schools and have to go somewhere else. And we all know Rent isn't cheap either in a lot of places. So it's often to cost you more to go rent a place and move and uproot your family and more stress. Whereas if you just communicate and talk to people, there's often some ways that organizations or banks or lenders or stuff like that are willing to try to keep in a house. So that's the thing, is avoid the shame. Realize that a lot of people went through it. I used to always joke that, when we saw 15 million Americans water and facing huge foreclosures back in 2020, a foreclosure was just going to be your scar. Chicks and guys dig scars. We've all been there, done that. It's not like it was back in 1929, but understand, it doesn't make you a bad person. People lose their jobs, people get sick, it's expensive to live. Understand that, hey, maybe you do need to downsize for a while. Maybe you do need to move in with your family. If that's the case, okay, there's some bonuses out of that. But it's better to approach that, and like you always say, shed light on an issue first versus trying to keep it in the dark. Because you know what grows in the dark? Mold. And the worst thing that grows in the dark is to have this big moldy problem that's just going to get worse. Shed light on it, come up with solutions, understand you're not a bad person, and just move on and figure out, hey, here's where we're at, what we need to do to fix this, because then you can come up with a plan. The more you hide it, the worse the situation is going to get, and you're going to run out of options.
Yeah, I love that. All right. So communicate, communicate, communicate.
Did I say
Don't,
communicate?
yep, don't hide it. Bring it out in the open. Make sure that you're paying it, that you're acknowledging it and paying attention to it, because pushing it aside or putting it in the dark or whatever you want to call it is just going to make things worse. All right. What suggestions do you have to help people who are panicked in this situation to move to a problem-solving mindset rather than a panic mode?
First one, talk to somebody you trust, you like and trust. All right. That might be your priest, your minister. Go talk to somebody like that and tell them what's going on. They may know other solutions for you immediately. And just the saying, if you haven't, first and foremost, you'd be talking to your spouse before you go to that. But if you want to try to come up with a solution, then go talk to somebody that understands it. Call, if you know somebody in the mortgage business, pick up the phone and talk to your mortgage. So if you know somebody who's a realtor, they understand these things. Pick up a call. Realtors may be like, oh, I'll sell your house, but many of them will know different options. So talk to experts. All right. That's the biggest thing. Just talk to experts, and understand that maybe you just do need to walk away. There's a movie that Tom Hanks and Julia Roberts were in a few years ago, where you see him facing foreclosure. He's got an SUV. He sells the SUV off and buys a moped and goes to college to become something, because he was in the Navy for years. I can't remember what the movie. It was a very cute movie with Julia Roberts and Tom Hanks. But just understand that, hey, maybe it's time for you to downsize. Maybe it's for you to try to bite off less than possible. Maybe it's time for you to cut up those credit cards or unfollow TikTok Shop in a lot of cases. So, maybe you need to recycle that dress in your closet or the shirt in your closet instead of going out and buying a new one. There's a lot of
Makes
ways to,
sense. All right. Scott, tell us who needs to find you. You're telling the people that are facing foreclosure to go out and find these other experts, but who needs to find you?
Well, if you're thinking about if you're looking or an active real estate investor, and this is one thing you're listening to, then I'd love to talk with you. I'm always glad if you've got issues you're dealing with to help you answer the questions you might have. Maybe it's not a time for you to be a real estate investor, but maybe you need to do that in the future. But you can always reach out to me. I'm here to help, folks. Like I said before, I faced foreclosure back in 2002 after being married and buying our first house and really being in a shitty situation. The thing that helped me is I talked, I figured out a way to solve it, and I communicated. And it doesn't make me a bad person. Things happen. You just deal with it. I was, we were able to keep our house and stay in it and find solutions. Now, fast forward, it's hard to believe. What is it? The 23 years later, we've bought a couple hundred properties, close to 1,000 properties out there. So you don't need a bank loan to go invest in real estate too. There's other ways to do it. So feel free, if you want to pick my brain about avoiding foreclosure or different options for you, how to get started as a real estate investor, you can do so by going to talkwithscottcarson.com. That's my calendar. Talkwithscottcarson.com. Schedule a time, and I'll give you 30 minutes to pick my brain on that, whichever way you want to go.
Right. And I think they can also reach you at your website, weclosenotes.com.
That's correct. That's the mothership. You'll find our classes, blogs, podcasts, everything there as well at weclosenotes.com.
Okay. And you gave me another link to noteweekend.com. Tell us what that is.
Yeah, we have if you're thinking about getting into this note investing business, this sounds interesting. We have a free class that we offer up. If you go to noteweekend.com and register for that class, it's about a 3-hour class. We show you how we find these deals, how we raise capital to fund them, and all the different ways that we flip them to make money. And so it's a free, no cost, no credit card number needed. You can go to noteweekend.com, register, and then the class replay will come to you in an email and you can watch it. If that's something you want to pursue, great. If not, at least you'll be more educated on note investing.
Great. Thanks so much for being our guest today and for telling us all this great information about foreclosure and your business and selling notes. I appreciate you being here.
Linda, it's been an honor to be here. If you're listening to the show, folks out there, or watching us, do Linda a favor. We as podcasters love to hear from our audience. So make sure you hit that subscribe button or ring the bell. And then you also need to go over and leave her a 5-star review. We're not looking for a 1-star, 2-star, 3-star, not even 4-star. Linda is 5-star worthy, okay? So make sure you leave a 5-star review for her. And then make sure you share this show with at least one other person because she's giving you some valuable information today.
Well, thanks so much, Scott. I need to hire you now to. All right. If you're
Sounds
still
like a
listening,
good relationship there, right?
yeah, it does. If you're still listening, I want to let you know this. Understanding foreclosure isn't about fear, it's about power. And the more you know, the more options you have. Thanks again, Scott.
Thank you, Linda.
Thanks so much for listening to Real Money, Real Life. Want to see what's blocking you from financial confidence or discover your money personality? Head to the resources page at lindagriz.com for our free quizzes. That's LINDAGRIZ.com/resources. If you're loving what you're learning, be sure to subscribe and leave a review. I'm your Me Money Guide to Financial Clarity, Linda Grizely, and I'll catch you next time as we talk more real money, real life, because you deserve to feel confident with your money and good about how you spend it. The content shared here is for educational and entertainment purposes only. It is not financial, tax, legal, or planning advice and does not constitute therapy or mental health counseling. Please consult an actively licensed and qualified professional for advice or help specific to your situation.